Good evening, everyone. My name is Faisal. I am the head equities analyst over at Alpha Trades. It is September 11th, 2020. Um, so, for those who don't know, I usually do these videos Wednesdays and Fridays to cover just various things that happen in the market. But I haven't done one, I think, since last Friday. So, I'm just going to, do a weekly brief of what happened and maybe get into some of the scenarios that I think could transpire over the next week or 2 weeks, just based on what different sectors in the market are doing. So let's go ahead and get into it. So to start off, I just want to go ahead and take a look at all the sectors within the market. So I'm going to go ahead and use the spider sector ETFs as my technical picture for viewing the sector. So XLK is the technology sector, so that was down 4.3%. XLI was down 0.3%. XLV was down 1%. XLE was down 6.5%. Damn. XLU was down 0.7%. XLF was down 2.2%. And I think the last one, I forgot XLY. That's not really as balanced, but whatever. This is the retail one. I guess it's got a lot of Amazon in it. That's down 0.73%. And then the materials one, XLB, which was up 1%. So just based off of what we're seeing right now, the performances this week was pretty much as I was saying before. So for those who don't know my positions, I've been pretty short tech since I believe the 21st of August. It was like 2 weeks ago or something like that. And it's been a really good trade so far. It was really rough for about a week, and then everything kind of pulled back. And I've been hearing a lot of talk about buying the dip. And, you have some really good stocks that were leading the market before, like Coop, which was down 15% this week. That was one of the main leaders, as you can see, through this recovery. I mean, it went from its low of 125 all the way to 312. You also had a cybersecurity stock like Okta have a significant recovery, definitely up over 100%, and that also had a very bad week, down 4.81%. And then let's go ahead and check out a more well-known name, Salesforce. So Salesforce had that huge earnings pop a couple weeks ago that really took tech significantly higher. I think that was when tech was up like 6-7% in 1 week. And so far since that earnings, it's really come down, sold off another 4.5% this week. So, there's trouble in tech land. And I remember getting a lot of heat for having tech. I think I got in this week right here, and I had to hold through this week, and it was really tough. And at that point, you just have to fight the fear and stay calm and understand that what goes up must come down. And things were already very extended. I think I'm not the only person that was thinking that tech was going to pull back, but nonetheless, capitalized on it. And I continue to be in tech shorts like Roku and a couple other names, but it's looking like tech is going to continue to pull back. I got a couple of questions this week regarding stocks like Tesla, Apple, whether or not now's the time to buy it. Short answer, no. Like this is absolutely not the time to buy it. If anyone's telling you to buy the dip right now, I think it's very premature. And I don't know if I would necessarily feel comfortable about shorting it if you're not experienced in shorting. This is a really tough market to be in, and I think the volatility of the market is going to it's going to make things so different. Because as we kind of have seen throughout this entire recovery rally, if there's one theme to this entire rally, it's that price changes sentiment. And it'll be very interesting to see if we get a decline, like the NASDAQ declined 10% in 3 days, which was one of the biggest drops ever, or something like that, a 3-day span. and the sentiment did not bat an eye. Actually, it was so funny. I literally saw across the board people say that this was very healthy. This is not healthy. Like this is, it is like obviously it's healthy from the standpoint of things were extended, they needed to come down, but you're not supposed to have a 10% drop in 3 days. Not from the highs. I mean, I've seen a lot of smart people say that this is all part of a bull market and this is the normal cycles. And while I am a bull for the next 2 to 3 years, I'm only a short term bear. That's crazy to assume that. And I think there's a lot of talk about buying the dip and um, now is absolutely not the time to buy it, in my opinion. I think we have maybe one more leg down to shake people off and ultimately change the sentiment. But so far, as long as the sentiment continues to be so strong and the buy the dippers continue to shout that there are more all-time highs to be had within the next 1 to 2 to 3 weeks, um, this market is still prone to having very volatile swings. And I'm talking, we could see another week where we go down 7, 8%. And at that point, what are we saying? When we look at stocks like a stock like Tesla, for instance, Tesla went all the way down to 329. I think I have my target, my support target, not on these charts, but on my other ones. Um, I think it was around 280, 290. So that stock could really come down a lot more, maybe around another 10% from where its low was this week. So I will not be surprised if that happens and we could get that type of leg down. Uh, it could transpire within, like we saw earlier, 2 to 3 to 4 days. It's going to be very short-term corrections, but they're going to be very volatile. And I think it rings true to the theme that I was talking about in that price changes sentiment. Even though we had pulled back, let's just say, for instance, that scenario comes true. And next week we are down, I want to say, like more than 15% from the highs that we were at 2 weeks ago. What happens then? Do people start saying that we're in a bear market? I know that there are reasons to not only take profit, but to sell the market because it's looking like Joe Biden is having better odds of winning the election. Um, and that in turn means higher corporate tax rate and that's going to affect the S&P directly, like off the bat. Or it could be the increased tensions with China. As you've probably seen in the news last week, I believe Trump blacklisted one of the biggest semiconductor companies in China, and that's a huge escalation in tension. So that's still a situation to monitor and could see we could see some selling as a result of that situation escalating. So there are reasons to sell the market at this point, and at least up until this point, maybe for the past month or so, these reasons have eluded the market and no one really talks about them until the selling begins. Because people are always looking for a reason why are stocks going down. And most of the time it's actually pointless to really kind of think about why stocks are going down. You kind of just the headline will pop up when the headline matters. People will use it as justification, but ultimately, once that sentiment changes and once people get the idea that this is an unsafe environment to invest in because of what I just listed, whether it's Chinese tensions or the Biden winning the campaign, ultimately these are short-term problems, but they're going to keep people out of the stock market for a lot longer than they should, and that's the time to buy. So once again, I think we need to see a little bit more price decline within these high growth assets, definitely Tesla, definitely Apple, definitely Microsoft, in order to really change that sentiment and ultimately have that really great buying opportunity, because I still feel like there's just so much optimism. At every open, you're just seeing these stocks kind of being bought in before the open and right at the open. There's a lot of buying the dipping mentality, and I get it. Like, I totally see why. And when I look at a lot of indexes and uh, kind of the key, I can't really, I don't want to say key leaders, but definitely some of my leaders, definitely the indexes. I'm not scratch the leader part. Definitely the indexes. They're holding their 50-day moving average, and I've seen that a lot circulating around. That's the key point. That the fact that stocks have corrected down to that level that means that buyers will hold it, and this is a good time to buy for a pullback. But once again, I think people are putting way too much faith in technicals when throughout this entire year, technicals have really not proven to be um, as valuable as they have been in the past. Definitely before 2018, before that whole trade war stuff. So I just want to be wary of that. Just because the indexes are holding their 50-day, that really doesn't mean anything to me in my mind. Um, I'm still seeing a lot of breakdowns within the high growth leaders, a lot of tech leaders, and ultimately the number one stock I'm watching for this entire rally, because it's ultimately my number one stock for the next definitely this year and probably next year. Nvidia. Nvidia is the one stock. If you're someone who does not want to pay attention to the market day to day or hour to hour like I do, minute to minute like I do, then Nvidia is the one stock you got to keep an eye on, because out of all the stocks I've looked at all the companies I've looked at, there is none more attractive than Nvidia. And you could say to yourself, wow, that chart looks even more extended than Apple, Microsoft, Amazon, any of these companies combined. But I'll tell you, it's justified. They are in all the right areas of growth. They're accelerating their new avenues of growth, like data centers. Their technology innovation gap between their competition is still very high from what I read, and the estimates are pointing to even more gains, and they're accelerating during an economic period where you're seeing some sectors declining as much as 50 to 60%. So when you have these types of factors going for you, at least within the next 1 to 2 years, as long as those distressed assets remain distressed, I could definitely see the stock, it's trading at a 64 PE right now. It could definitely trade somewhere to a 200, 300 PE because of how much growth is ahead of them. People will buy this stock for that growth years before it actually happens, if they feel like the technological advantage is clear. And I think with NVIDIA, it is very clear. And, this stock may look like it was at 160 bucks in 2019. It's at 485 bucks now, and I'm telling you, by probably 2025, it's going to be at $2,000. So don't think of it as, oh my God, it's gone up so much. And especially if you look at just from 2015, it was 23 bucks. When you look at it like that, you may think, oh my God, this company has already seen its full value expanded, and it can't go up anymore. But this is like buying Amazon at 485 bucks. And what price is Amazon at right now? As 3,106, yeah, just 3,111. You got to think of it like that. And so Nvidia's gone up a lot. It's definitely my number one name. It surpassed Microsoft in my list. And ultimately, this is my main barometer as far as the leadership stocks are concerned. So when Nvidia starts to give me the right short-term signals, and I got my own technical signals for that, but when it starts to really bottom out and show some strength, that's when I'll get the most confidence in the market. But I'm still seeing weakness in it. There's still no signs of bottoming. Yeah, there are buyers at the support levels, but that doesn't they're not strong enough to take it above the resistance levels, which is what I really look for if there's buying. But that's not happening. And Nvidia is a great stock. I like, you could buy it here, and in 2-3 years, I think it's going to be much higher than it is here. And that goes with saying the tech pullback is going to continue. Like, this stock could pull back another 20%, and I'll still feel like next year it's going to be higher than 486 bucks. But ultimately, I think the stock could come down to around 440. Maybe 400 is like a psychological level. Could hold that. I wouldn't be surprised if it went down there, but I think 440 is where I expect a good amount of buyers to come in. So hopefully around that level, when it gets to there, I see the market has pulled back, and I start to see buying in other leadership stocks, whether it's Okta, Coop. Let's see. So we cover Coop is kind of the SaaS software. Let's see. ServiceNow is also a really great leader, fantastic company. When I start to see bottoming in these types of stocks, that's when I'll take a shot on my favorite growth names. And As of now, I really don't know. I haven't narrowed down my list enough. I've started on it, and I've uh, really tried to think about where the trends are going for the next. I don't like to think more than 5 years. So for the next 2 to 3 years, where I see the most developments coming from. I haven't narrowed down my list, but it's coming soon. And as soon as it comes, I'm going to share it on our Discord, our Alpha Trades Discord. For those who don't know, go ahead and check us out at alphatrades.com to learn more information about that. But I'll update my high growth list and give y'all a bunch of new buy targets, and um, hopefully I'll keep it in line with some of the trends that have changed from the last time I put out the growth list to now, and there are some more enhanced trends. Like I didn't really cover data centers in the last growth report, but I think that's going to be one that I'll definitely cover. AI is another one. Big data, 5G. Just there was a lot of themes going on, which is why I'm still very bullish for the next 2 to 3 years. I think the technology cycle, along with how easy it is for companies to grow, whether it's low interest rates or just the amount of cash that they have, the ability to use that cash a lot more effectively. There's a lot to be positive about, at least in terms of the high growth technology space. I think there's a lot more room to run. I'm not going to get into the whole unemployment, 30% unemployment part. I think that's a dark horse that could end up biting the entire market in the back if there's not a smooth recovery. But ultimately, I'm not an economist. I'm not about to get into that. So as of right now, I'm just going to strictly speak on innovation and technological advancement and just how well we are adopting these new technologies. And so far, it's COVID is, as we all know by this point, COVID's really expanded the rate of adoption, and with these new technologies coming out, you could see that adoption rate continue to expand for a lot longer than people think. So once again, looking for all these leaders to stabilize, but as of now, my short-term technicals tell me there is still more pain ahead. These guys are not seeing enough strength to get them above their key levels. So for that reason, I've been telling people since Tuesday, since last week, that high growth stocks, tech stocks, are not a place you want to be in for the next. I think for the next at least week, latest 2 weeks. I don't think this pullback is going to be long, but it's going to be vicious. So if you're in it for the long run and you feel comfortable holding, if your stock goes down 15-20%, then that's fine, because I really don't think we're not going to get a retest of the lows. Anyone who thinks that I don't think we're going to get that. Okay. There was literally no backup plan when we were super low. Like, this was before the Fed and everything, and I doubt we get back there. We could maybe retrace somewhere to like 316, or I don't know, just somewhere between here. But once again, it's a wait and see mentality as far as how sentiment changes and how these leadership stocks react at their key support levels. So I covered high growth a bit, and you guys know my view on that, which is negative, at least for the next 2 weeks. But on the bright side, I think it's also important to look at, once this pullback is done, and at this point, I don't really know if it's a secular pullback, as far as, like, I get tech is leading the pullback, but as we saw this week, tech went down. That's wrong. Yeah, weekly. Tech went down 4.36%, and a sector that I kind of think is interesting, the industrials, XLI, was pretty much flat for the week. And, you may say, oh, it was flat or it was slightly down, whatever. The market's obviously not looking good, but I will tell you, a lot of the industrial leaders this week showed good amount of strength. Not enough to make me take a shot on them, but definitely enough relative strength to where I have my eye on them. Caterpillar was one that had a phenomenal day today. It's up 3.81% for the week, broke out above its pre-COVID 52-week high. It's got another level fairly soon, a very high level of resistance coming up in a couple points. But the fact that it was able to break above its pre-COVID high, even though earnings are set to decline more than 50%, granted, they're going to bounce back 40%, but still, you're not making up for that $11.06. It's not only quite remarkable, but I think it's telling of the future environment. So we have a low dollar, and internationally exposed companies like Caterpillar are really going to benefit from a lower dollar. We have low interest rates. Um, if these companies like Caterpillar, Deere, URI, if they're going to see some benefits from that infrastructure bill that's supposed to pass at some point, and even if Trump loses or wins, or whoever wins, I think we're going to get that infrastructure bill, um, as it's going to be very crucial to the job market recovery, in my opinion. Um, you're going to see these stocks and their products have so much demand, at least over the next 1 to 2 years. You know, as I said, I think it's going to be a big part of the recovery, and I think um, both administrations will make it a signature part as the small business world continues to struggle, and the job market looks bleak. You're going to need to create jobs somewhere, and I think the infrastructure bill kind of set that up perfectly. And there's a lot of work that needs to be done, and these companies will definitely benefit tremendously from any increase in demand resulting from that bill. So they could very well be seeing this type of the moves that they're seeing, even though Caterpillar is down 53%. They're not the only ones. Let's go ahead and check out Deere, down 24%, but up 36%. A little bit better. They're making record high earnings in 2021, but still, you know, these companies are declining this year. But you look at a stock like Deere, which is up, holy crap. Pre-COVID high was 182. It's at 215. I mean, that's incredible. That's almost 20%. That's more than 20% higher. No, I think that's 20% higher. Um, it's exactly what I said before. People are really buying for the future trends, and I think even though I like to be short-term pessimistic, and I love to trade the market, I always like to keep my eye on the long opportunities, and I feel like industrials are showing you through how they're performing as this pullback plays out. They're showing you that they want to be bought. And I think ultimately, once we do get a pullback, and I'm still in the camp that believes that this pullback will broaden out, you're not going to see this much relative strength from the industrials as you saw this week. But once you get that broad pullback and the industrials and certain parts of the healthcare sector pullback, those are going to be the biggest leaders over the next 1 to 2 years, as they're going to benefit tremendously from low interest rates, the dollar being relatively low, and just overall demand increasing for their services. So once again, keep an eye on the ball, even if for all those who are short with me, or who are a little bit bearish on the market right now. I really don't think you should be bearish for long, and keep an open mind to how the trends are going to change at least next year, and try and figure out if there are any balanced trends. Like, I really think the industrial sector is going to be one that's going to benefit no matter which administration wins. So that's one that I'm definitely keeping my eye on, and the fact that they're trading at such high levels relative to where their estimates are indicating is somewhat evident of people buying for the future trends that I just laid out. And I think that about wraps it up for this video. I wanted to keep it short and sweet. Didn't want to really rant on like I usually do. I hope I kept things a little bit more precise and more focused, and that you guys got some information out of this. As always, none of anything that I mentioned earlier is investment advice. This is all my opinions, and just I trade the market daily, so these are just my opinions from what I see throughout the day, and you guys can choose to take them or not. But please discuss any information that you get from this, or any opinions that you get from this, with your financial advisor before you make an investment decision. Also, once again, please check out our Discord, alphatrades.com. More information about the Discord, the premium Discord, where we update, like I give live updates and alerts on stocks throughout the day. This is not, I don't look at, oh, what stock did well in the morning or do something like, no, you get the up to date when I get the alert, when I think is the right time to get in. And usually they've hit fairly well. There's some rocky roads here and there, but for the most part, I think I do a great job, and those alerts really are great opinions overall. So even if you don't like to trade off that stuff, it's still information that you can keep to yourself, because all the stocks that I do talk about, for the most part, they're all very good, and you should definitely know what these companies do. Whether I'm talking about the leadership stocks or interesting stocks of the week, just keep a little watch list and see how they do, because I don't talk about any of these penny stocks or something like Kodak that's got a long shot or anything like that. These are all companies, dynamic companies that are moving week to week, and I like to cover them. But anyways, enough about that spiel. Hope you guys had a very nice watch, and I hope to see y'all in the future very soon. Hopefully this Sunday with Amo. Take care. Have a good one.